This is Alan Bush with Archer Financial Services. We're going to start out with the stock index futures this morning as usual. Seeing some better prices today. This very much linked to comments from Evans of the Fed in his speech yesterday when he said that he is for the most part in favor of more accommodation. This seems to be in line with other Fed officials in recent days indicating that they are in favor of easier credit from the Fed. Of course, we do have the Fed meeting coming up on the 19th and 20th of this month. This could be a very opportune time for the Fed to announce additional easing. And of course, we do see strains within the global financial system, all the more reason for easier credit internationally. Of course, we did have easier credit from the Bank of China last week. So in advance of the Fed meeting that is coming up, I would expect stock index futures to perform very well. Over in the foreign currencies, we're seeing the Euro holding up relatively well, even though the situation in the Eurozone seems rather tenuous at best. In fact, we do have Spanish yields up, getting close to the 7% level now today at 6.67%, up 14 basis points. Of course, the 7% threshold is the area where other EU members required assistance from the European Union, so that's a very critical point. So based on what we're seeing in the foreign currencies, I think the euro will hold up relatively well, possibly because of the chance of Fed easing credit offsetting the negative influence of what's happening in the Eurozone. But I think this is likely to be a situation that lasts only until the Fed meeting is out of the way. After the meeting is concluded, I think we'll see a new leg down in the euro currency. As far as the commodity currencies, the Australian dollar and the Canadian, basically seeing the same pattern. Those two currencies will probably hold up well in advance of the Fed meeting. After that meeting, I think we'll see a new move down, probably new lows for the move in those two currencies, the Australian and the Canadian. Credit markets, a little bit easier today. We do have the Fed auctioning $32 billion in 3-year notes. This is part of the $66 billion in offerings to take place this week. But I think that as we get closer to the Fed meeting, I think we'll see prospects of easier credit supporting the treasuries. In fact, I think over the next few weeks we'll see a move testing the recent highs for the treasury futures markets. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.